Good morning, everybody. It's Friday, November 15th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down a penny at 4.18. January soybeans were up 7 3/4 at 9.95 1/4, and December Chicago wheat was up a penny and a half at 5.31 3/4. This morning we had weekly export sales, pretty much in line with the estimates across the board. Corn was a little over 1.3 million. Soybeans, 1,555,400. Wheat was at the middle range, 380,100. Meal upper end of the estimates at 302,400, and oil was as expected at 16,500. One thing to note, we will have Notebook Crush out at 11 o'clock Central. Looking for a big number here today, 197 up in that ballpark. So that'd be, if realized, another record, I believe, on the crush side. So with that, Dustin, maybe a few thoughts to wrap up the week here. We'll throw it around the room and go from there.
Yeah, Dan, I think, it's obviously we kind of questioning like how low can we go before this starts impacting, future outcomes. To me, it still feels a lot like 2020 going into 2021, where they just keep pushing a beach ball underwater. And, it'll be, almighty King Dollar. I think that still gives us direction for a while here. But we are building the demand base. We continue to see really good sales, good usage. And it's kind of price and time. I think eventually that helps, kind of move through some of this extra supply that we're projected to have now.
Very good. Ben, what's on your mind this morning?
Just looking at the charts, see corn and beans flirting with their 20-day moving average. Corn has definitely been supported from that perspective, but it's vulnerable, I think, at this point. We've seen multiple times in the past where bear markets kind of get an early jump start, only to be faced with things like delivery, options expiration. So I think corn is kind of at an inflection point here on what its next move is. The big decline week over week in sales, but you could maybe connect the dots that a lot of the demand has been front loaded, and concerned that we still will see a lot of corn contracts that are on basis contracts that within the next 2 weeks are going to get the call to say price or roll. So that being said, it may be a safe haven asset through the next, 6 to 10 weeks. So
very good.
Yeah, Ben,
Justin,
we were talking yesterday on how the grains have really been an orderly kind of market really since September, right? When you're talking about the moving averages and support areas or resistance areas, right, kind of bouncing, corn's been bouncing off the 50-day or the 100-day, which if you look at December corn's at 416 for the 50-day or 411 for the 100-day.
Yep.
So I'm kind of curious how we'll trade that or test that today. And beans on the other side, right, kind of been using resistance or using some of these moving averages as resistance areas. So just very orderly. We're kind of saying it's really if you do have grain that you want to market, target orders have been working really well at some of these different levels.
I guess my concern here comes that we don't have that big short heading into a period that has historically in bear markets seen pressure, and we will get, I think it'll be a pretty heavy number on what has been bought since the last COT report. So there could be an exit issue here, but I would view it as an opportunity heading into, once options go off and we head into delivery. I think that people that want to be bullish corn, that's going to be their true test coming out of that period.
Yeah, thinking about what the market's asking for right now, like we've got tightening spreads, strong basis in a lot of areas, and the market's asking for some of those deliveries to be sped up, and that main price incentive's happening through spreads and basis and not through flat price. So it makes sense in a lot of ways. We have heard, record bags going down in Illinois, for example, record yield projected for Illinois and Iowa. So where's all this corn that we're supposedly having, 2 billion bushel carry in and record yield? Is it sitting on farm just waiting to be drawn out through a higher flat price? Or is it that we're missing something? The demand's much stronger than the projected supply outcome. I would argue that, one of the things you can do, even if you're, sitting with, bushels that you really don't need to take money on until January, JFM, start to look at that cash market, and you always can, there's lots of ways to have ownership that goes on out. All these spreads narrowing up, if all those bags are going to be picked up JFM and you're going to be competing with the crowd again, perhaps that market doesn't stay nearly as tight as it seems to be showing right now. And the reason why I'm thinking this is go back to August. Everything looked fairly tight, going into the end of that July contract, but then all of a sudden spreads basis collapse when we finally had to pull the last bit of grain out of old crop storage that never got the flat price that it wanted to get. So you got to think about it in those terms of like, is it because flat price is low that we're seeing these things narrow up? And what happens if they actually start to rise?
Yeah, one thing I would say is, yesterday between what yourself and Ben met with 60 bankers and credit analysts. Yeah. So I do think there's a quiet period in here where, there's a lot of nervousness in the industry and we're kind of like pretending it's not there, where there could be a lot of those bushels that have to come to market. And there's going to have to be some kind of realization here of, the potential losses or, financial tightness that's going to happen in our industry. We're all hoping for this rally or something to bail us out, but I do think that's a real risk, is that I believe there's a lot of unpriced bushels that are kind of just hoping for better times. And you have to be a moment here where, we close the books on, loans from the 24 crop year and start looking at 25 budgets, and most producers are going to be underwater to start. So I do think there's a financial aspect that hasn't been addressed yet. So that is a risk, especially in this time frame, like between now and call it the end of the year, first quarter next year, where there's going to be a lot of hard decisions and discussions that happen.
Yeah, and working capital is built to be fairly strong in 21, 22. And we're just starting to see, hear rumblings of like working capital expected to start coming down here for 24 and 25. So, that would make sense that there's been a lot of staying power, but, last year it wasn't until JFM that we really saw those spreads start to widen. And it wasn't until August until we really saw those spreads start to widen again. And so you saw those two timeframes really in the market of when growers came with bushels. And right now it's not happening, even though we're hearing stories of record bags on the ground. So if that's the case, what should we expect in January? I think that you want to try to be a little bit cautious. If something go over the edge, just not get in line with the crowd here. If there's something you need to do in JFM.
Well, and right now, right, we're got a really strong dollar, but we got really good demand. I mean, you start getting into that time frame you guys are talking about, the early spring. We're going to be looking at South American weather. We're going to be, making or breaking a South American crop as well, right? And then you get into the summer months. If there is that big stocks of corn that we have that is held by the farmer with a strong dollar, and we're competing with a big South American crop, it seems like there's a lot of risk.
Yeah, I mean, the benefit that corn has is that the majority of the South American corn crop is until later, into the summer.
Yeah.
So corn's probably got a better staying power just because it'll have export demand for longer. But, our sales are 35% higher than a year ago. So how much of that's front loaded, which we've talked about a lot. Beans is the, I think the market's already saying that, right? November 25 beans made contract lows yesterday. So, the bean market's already saying that that's going to be an issue.
Well, Justin, people are saying we're front loaded, but I mean, if you look at it still, I mean, to be fair, we're priced competitively globally. So, I mean, it's not like they're making a bad buy,
No, it's all good. It's just, are we going to stay 35% ahead of a year ago total, or is it because we did get cheap and, they bought a bunch, so that's the $1 million question. But, to Dustin's point, I think all those things are true. I think the farmer did put everything in storage. They got done dumping old crop corn and said, I'm not going to sell anymore, put the rest in storage because harvest went by fast. And we had good demand, like we all been talking about here. So now what? We had a nice rally, got to over 430. I think the questions between now and the end of the year, have they bought it? And we're not seeing, sales have obviously dropped off. The daily announcements have dropped off. I think on that rally, Ben, we got, we weren't the most cheap. We weren't the cheapest price corn. We got above Ukraine and Brazil. So I think we kind of ran into that area where we got non-competitive.
Yeah, I think that everyone makes a good point on both the narrative for potentially supportive prices in the first quarter and then the potential for it to be anything but, especially if we find out a lot of our demand was front loaded when we typically see, more business January, February, March. And I don't think anyone can make a case for wanting to pile drive corn sub 4. And I don't think that there's a reason today for it to accelerate above 35. We saw a new high by a half cent just 6 days ago. And I could see a pretty wild chop in here, and it may actually wind up being a very good trade. But there are enough things out there, and that's not even factoring in what may come out of the new administration with daily announcements already happening on different things. So maybe a volatile chop in these areas till we figure out what we want to do. And I agree. I could see corn coming out of bags, demand drying up. Maybe we find out it's front loaded, and that be a reason to go sub 4. And I could see the opposite. Maybe things are not as doom and gloom with a new administration as people are speculating at this point, and maybe demand keeps up and we could do something positive. But if you look back, we've been in the same basic range since the end of August. So,
well,
it's interesting too. Oh, go ahead, Dustin.
I was just going to say, like, what the market's telling us is that that old crop is extremely tight. They're not getting enough flow. We've got July corn recently trading almost to double-digit gains or a premium to Dees corn, July 25 to Dees 25. And, we're talking about 2 billion bushel carryout thereabouts on record yield. And so we're building a couple 100 million bushels of supply on record yield. And then yet we're pushing the value of corn well below cost of production. And we're expecting to have another, record yield on 91 million acres of corn. If everyone thinks that we're going to go back to 95 million acres of corn, then this makes sense. But why would we when corn is at such a loss? And generally we see at, these lower price points, there's a more even split of corn and bean acres in 25. So I think it could be one of two things. It's like either the market's got it wrong because the order flow is very light in the Dees 25 contract, and there's some sort of larger fund that's getting long and bull spread, which is pushing the back end of the market lower, the front end of the market higher. And then, once we actually get to that point, the market might decide that it mispriced corn and it put too much of a disincentive for corn acres for that year.
Yeah. Well, corn market can always buy acres back real easy. So I'm kind of curious, it does seem like the market is scared we're going to get too many corn acres. We have too much corn going into it. Farmers are probably trying, I can't have a bad yield, or it's really hard, right? New hybrids and all these new things. Every time that we've thrown bad weather at it, seems like we have a good yield.
Yeah.
But,
I've heard that.
They want to plant corn.
Right. Which I agree with you, though. The setup is there, if we don't get the acres or, we do have a problem for a nice quick run up. And then we'll go probably plant a record amount of corn acres in June. Yeah.
Well, I would say like crop profit has been really good for us, just kind of keeping a heavy, kind of like a grounded look at what yields could be through the season. Right. And I think that data would show that we had actually fairly good conditions the last 2 years to get these yields.
Yeah,
right. Cool nights, the rains at the right time frame. So a big shout out to crop profit, because I think that kept us kind of level headed through the year.
Oh, agreed.
Oh, very good. Quickly, Ryland, cattle making a bad trade this week, and hogs pretty weak as well. So what's your wrap for the week?
Yeah, we saw a little bit of liquidation yesterday. I think just overall, some of the fundamentals really started to weaken up. Not too much of a surprise here on the cattle side. We did see cash start trade at 185. That was down about $2 from the previous week, and I think the market was really anticipating this. So overall, we did seeing beef prices slip as well. So I think it all kind of moves hand in hand. We've got the discount kind of priced in here on the board, and looking into next week, I mean, seasonally we usually see a little bit of a stabilization in the cash market, maybe even a little bit of an uptick here in futures. It just feels like you priced in a lot of the bad news. So we'll see. I think it's going to be pretty important how we finish up today, just because December actually closed below the 100-day moving average. So we'll see if the managed money wants to play a little bit of defense down here. But overall, it feels like the market kind of did its job. We got our lower cash and everything. On the hog side of things, kind of same thing. We saw a weaker cash market. We saw bellies down $20 yesterday. So the sharply lower belly trade this week definitely, I think, kind of got into people's heads that some of this near-term demand is going to start to dissipate at some point here. So carcass was down $3.19 overall. So we're actually finally seeing some liquidation. So we're down about 783 in commitment yesterday. So overall, it just seems like there's a big risk here with the funds carrying such a record long position at such an odd time of year. I think that's going to make people a little nervous, probably draw about a little bit more hedge pressure on these rallies. June hogs getting up to $1 yesterday as well is just going to draw a lot of attention, I think, from the producer side of the market.
Very good. Appreciate that update. We made it, fellas. It's Friday, end of the week. Everybody's most favorite segment here. Fun Fact Friday with Brian. What do you got for us?
All right. Thanks, Dan. Happy Friday, everybody. We have a full moon tonight. And I know I've talked about full moons before, but this will be the last super moon of the year. We've talked about the strawberry moon last spring. I know Ben was glowing in the basket of its pinkish hue, but I couldn't pass this super moon up. This is called the Beaver moon. Why the Beaver moon? Early settlers and natives noticed this is the time where beavers would fill up on food, move into their lodges, so this was the time to trap them for their fur. Back in the day, you needed everything you could to stay warm during those long winter months here. So Ryland, if you're looking to trap some beavers on the Cal Sag this weekend, with this huge super beaver moon out there, this would be the perfect weekend to do that. So,
I'll be out there for sure.
Yeah. It's Ryland's favorite moon.
Yeah, exactly.
Oh,
it comes once a year.
Yes. So have a great weekend.
With his hat on.
Oh yeah, you can see him with the beaver hat for sure.
Oh, thanks, Bri. Appreciate that. Thanks to everybody that tunes in on a daily basis. We appreciate the support. If you wouldn't mind, throw us a like or subscribe. Helps us and keep you up to speed on everything AgYield. So once again, thanks to everybody that tunes in on a daily basis. When the markets are open, we're doing this show live at 8:15, streaming live on X, Facebook Live, and YouTube Live. Hope everybody has a great weekend. I'm going to give a real quick rundown here of the markets as we head to the weekend. These corn about unchanged, 418 3/4. January beans are up 11, 998.5. And December Chicago wheat's up 6 at 536 1/4. Appreciate the thoughts and comments here today, guys. It was a good show. Once again, hope everybody has a great weekend. We look forward to talking to you next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.